give us another minute here, and then we will get started. Excellent. So, hello everybody and welcome to today's webinar on negotiating or renegotiating the terms and rent in your dental office lease. My name is Matthew Donato. I am one of our senior consultants and keynote speakers here at Cirrus Consulting Group, really with a focus in helping dentists and yourselves in the commercial office lease. As well as prior to this, I focused on small business management and really helping to grow and scale businesses, as well as a very thorough background in real estate, both residential and commercial, through family and other companies that I helped represent in their commercial and residential needs. So first, I want to give everybody a bit of a background on Cirrus, who we are, what we do, and really why we are equipped to give today's webinar. So first of all, we are the only healthcare and dental specialized tenant representation firm of our kind in all of North America. And we were founded by dentists for dentists back in 1994, so a little over 26 years ago now. And the reason that we were founded was because we noticed that many of yourselves and your colleagues were being taken advantage of by landlords, by the brokers, and really being forced to sign on the back of a broker's car and really force you into the lease agreement. So with that being said, over our 26-year history, we have negotiated over 12,000 dental and medical office leases, predominantly dental, but 12,000 successfully. Now, going back to really what makes us unique and why we are one of a kind is that everything for us is done in-house. So we have an in-house legal and leasing team and a full team of lease negotiators and attorneys, some of which who have been with us for over 17 years, some of those that actually worked for the major national landlords and taking them from the dark side, if you will, and having them negotiate for dentists rather than against them as they did previously. And annually, we represent about 500 doctors throughout all of North America, and we review roughly 1,000 leases every year. Now, beyond negotiating and reviewing leases, we also deliver 75 continuing education accredited seminars annually. So some of the webinars, such as you're on today, and prior to COVID, we were out in many of the major cities throughout the United States and Canada, giving continuing education in-person seminars. Now, in addition to that, we also lecture at some of the major dental conventions, such as the Greater New York Dental Meeting, the Pacific Dental Conference, the Yankee Dental Conference, and the California Dental Association. And this really gives us the ability to work with dentists nationwide. So what's the purpose of today's webinar? So first and foremost, we're going to go over the importance of the dental office lease agreement. Why is it so different than any other lease? Why is it more important to you as a dentist than any other commercial tenant? Further to that, we will go over the key terms and conditions within your office lease agreement. So really giving you a high-level overview of what to expect within your lease agreement, what implications some of these clauses could have on you, and how they can affect your business. And then we're always a firm believer in ensuring that you get something out of the webinar as well. So we will additionally be giving some practical advice on negotiating lease agreements, some of the steps, the tips and tricks, the insider information, if you will, to help give you a good understanding of how to negotiate the lease. Now, a very important question that I always ask, and do so at my continuing education seminars, is what is a lease agreement? And now I always get a variety of answers, the most common being a legally binding contract. And you would be correct, absolutely it is. But a way that I always advise my clients, and I advise you dentists to think about the contract, is as this: a check, the most expensive check that you will ever sign. Now, for many individuals, when asking what is the biggest payment you will make in your life, or what is the largest investment you will make, many answer it's their home, and they would be correct. But for those of you within the business of dentistry, the most expensive investment that you will ever make is your dental office lease agreement. So along with those 20 to 50 plus pages of legally binding terms and conditions, it is a check that you are signing. And what you should know is every single term and condition that is associated with this multi-million-dollar check that you are signing to the landlord. So why is the dental office lease so important? Why is it more important than others, as I mentioned earlier? Well, first and foremost, for you in the business of dentistry, your practice is the location in which all the money is made. Without your location, it is argued that you do not have that factory, you do not have that profit center that is derived from the location. And further to that, the dental office is the most expensive business in commercial real estate. You have the highest build-out cost in your location and in your space compared to any other tenant. And now once you have made that and committed to the next step, this money that you have invested in this space is there and there for good. And as you know, it is very difficult to relocate the practice. And what happens if you started the practice and in 6 to 8 months time, you decide you're driving into the practice one day and you go, you know, I would really like my practice a mile down the road. How hard is it to move? And the answer is very. It costs a lot of money, a great deal of time, and one aspect that isn't always thought about is the patient attrition rate. Regardless of how close or far away that you are moving, there is always going to be some patient attrition. So for those reasons, it's very important that the lease is structured properly so that you have long-term continuity and leverage and expectancies for your location. Because without the lease agreement being in place, you do not have the right to be in the location. That investment and that cost to build out the practice could be sitting on a crumbling shell rather than a strong foundation. Now, additionally, for those of you that are thinking of selling your practice, it is very important that the lease is structured properly so you actually have the right to do so. Because what some of you may not know is that through the lease agreement, the landlord has blocked your ability to sell the practice or has made it very, very difficult to do so. Now that we've discussed why the lease is so important, we also need to understand what the lease should do for you. Now, first and foremost, it should provide you with fair and affordable financial terms. Now, what I mean by that is taking a look at your internal versus external costs and fees. So internally, what do you produce? What is my overhead? What is my annual expenditure? Versus what does the market look like? Those external rates. What are the average fees associated with my market? What do the rates look like for comparable properties? What are the vacancy rates? There's a number of factors to think of externally, but ultimately, by evaluating these two aspects simultaneously, we ensure that we are paying affordable financial terms and fair financial terms reflective in the market. Now, also to be considered in terms of your financial terms are, for any of you that are in a triple net lease where you pay base rent plus any additionals, such as the taxes, maintenance, insurance, it's very important that we've understood or we've evaluated and ensured that we are not overpaying in terms of those taxes, maintenance, and insurance. And I can tell you that many of you are today. Now next, just as important, is the long-term stability and security. As I mentioned earlier, the lease is important because it is the foundation of your practice. Now, ensuring that you have long-term stability and security ensures that you have that ability to continue and move along with this large investment that you have built out. Generally, we advise a 10-year term with 2 5-year options, therefore giving you about 20 years of continuity within the space. And by offering that long-term lease agreement to the landlord, it creates a large portion of leverage with them. Because at the end of the day, regardless of how great your relationship is with the landlord, they're there for one thing, and that is to create an income. Now, especially as we've seen over the past few months with the ongoing COVID-19 pandemic, offering these landlords long-term leases has been extraordinarily successful. And now that's for a multitude of reasons. First and foremost, just as many of us had shutdowns in business, the landlords were not receiving rent for a large portion of their tenants either. It's creating a large strain. And I'm sure that many of you have seen in your own plazas and your own buildings that there are people declaring bankruptcy that are moving out. There's a large outflow of tenancy. But by coming to the landlord, especially over the past few months, offering a long-term tenancy to them, their eyes light up and create a great deal of leverage for yourself in the upcoming negotiations. Now, additionally, in terms of the long-term stability and that long-term lease, once again, going back to any of you that are looking to sell the practice in the next 10, 15 years, by creating this long-term lease, it makes it easier to sell the practice. Now, that's because any of the major financial institutions, whether it be Bank of America, Wells Fargo, RBC, TD, they all need at least 10 years worth of term in order to finance the loan for anyone to acquire a practice. Now, next, the lease must minimize your risk and exposure. This has to do with many of the legal terms and conditions. And a very common aspect of the lease agreement that I see with yourselves and your colleagues is that many of you today are signing the lease personally. Now, the large error with this is that by signing the lease personally, you are now giving the landlord the right to not only if there's any form of dispute, default, or there's any monetary value requested, not only does the landlord get to come into the practice, but they get to come after yourselves personally. All your personal assets, whether it be the car, the house, the estate, etc. So one way to circumvent this issue would be to put your tenancy as a corporation. Now, I can't exactly speak to which corporation is best at this point in time. It does depend on the situation. But by putting it in a corporate entity, you then create a barrier between yourselves and the landlord. Now, additionally, we should be maximizing your flexibility. Now, many believe that just because they're in a lease agreement and it's a long-term lease, there's no flexibility in that. That's not correct. There's a number of ways to structure the lease so that the lease caters to your life. Many of your colleagues think that you need to structure your life around the lease agreement. Where in actuality, what should be done is we structure the lease agreement around your life. And finally, once again, going back to enhancing your ability to eventually sell your practice. It is important that the lease is structured properly, one, to even ensure that you have the ability to sell the practice, but additionally, ensure that you are holding an asset and you're selling an asset rather than selling a liability or trying to sell a liability, which in fact, as mentioned, might not even give you the right to sell the practice. Now, building on that saleability of the practice, when going to sell, what are we actually selling? And it breaks down to three key components. First and foremost, the equipment, your leasehold improvements, things that the tangible items within the practice. Next, we're selling the goodwill, your patient charts, your relationship with your patients, the number of active patients. But as you can see from this graphic, that as equally important as those two items just mentioned is the lease agreement. Now, one way that I like to describe the lease, especially in terms of sale, is as the glue that holds everything together. Now, what effect would it have on the sale of your practice or on your practice as a whole if the lease was pulled out from underneath you? Now, to give you an example of that, I am a doctor. My practice has been valued at $1 million. How much of that valuation can be affected by the lease agreement? Now, the short answer to this is 100%. 100% of your sale or that valuation, as mentioned, can be affected by the lease agreement. Once again, stressing how important it is to ensure that the lease is structured properly in order for you to sell the practice. Now, what's in your lease? So this is an assignment provision. Now, what an assignment provision or the assignment portion of the lease agreement really outlines is how you can sell the practice, to whom you can sell the practice to, and what the landlord's involvement in that sale looks like. Now, what we have here is an example of one of the assignment provisions, and this is found in about 75% of the dental office leases we read annually. And as mentioned, we receive about 1,000 leases a year to review. So 750 of them would have language very similar to this. So I'm going to give everybody about 15, 20 seconds here. Just read through this clause and see if you could outline any of the issues. So the first aspect of this assignment provision that I want to bring to your attention is that if the tenant should wish to assign or sublet the lease premises, it shall first have received the consent of the landlord. So essentially stating here that in the event that you go to sell the practice and assign the lease agreement to the incoming buyer, you must have the landlord's prior written consent. Now, very normal to see that they want the landlord's prior written consent here. As I'm sure you can agree, if you were the landlord, you would want some say in who can stay in the location, who can leave, and what the lease is to look like at that point. However, what is troublesome about this clause is they're not discussing what the conditions or the parameters of the consent are to look like. Now, I'm not sure if any of you caught it today, but within 15 days following the receipt by the landlord of such request for consent, the landlord shall have the option to 1, approve of the tenant's request to assign, 2, decline the tenant's request, or 3, to terminate the lease agreement upon the effective date of the proposed lease assignment or sublet. So what that means here is that even for asking the landlord to sell your practice and assign the lease agreement, the landlord has the right to terminate the lease. Now, going back to, as I mentioned, what impact does the lease agreement have on the sale of your practice? And as you can see here, a great deal if they can terminate. Because what some enterprising landlords do here is you already found a buyer, you have somebody interested in the location, and the landlord will terminate the lease, increase the rent per square foot, and grant it to the incoming buyer. Now, another important aspect of this clause is on the final sentence, stating, notwithstanding the landlord's consent to any assignment or subletting, the tenant shall not be released from its obligations under the lease and shall remain liable for any failure of the tenant or its assignees or subtenants to observe each and every covenant of the lease. So what this means is that even if the landlord does grant you the right to sell the practice, you are still held continually liable. Now, unfortunately, a situation that I will never forget was a couple years back. A doctor reached out to me and said, Matthew, I really don't know what to do. Unfortunately, I sold my practice. I retired down in Florida. And after 8 years of being retired, I received a call from my landlord where the landlord said, hi, doctor, I hope you're well. Unfortunately, the buyer of your practice has now defaulted upon the 4 months of rent and has declared bankruptcy. So unfortunately, the doctor had to move back pay the 4 months of defaulted upon rent, and the remainder of the term until he found another buyer. It ended up costing him $85,000 out of pocket and out of his retirement income. So very important that we mitigate, reduce, or remove any of the liability that is associated with yourself post-sale. Now, some other traps that are within the dental office lease agreement, such as the demolition clause. Now, the demolition clause, what this states and what it grants is the landlord has the right to terminate the lease agreement upon usually 30 days notice for their purpose of remodeling, rebuilding, repurposing the premises. So just for the landlord wanting to redevelop their location, they can terminate your lease agreement upon 30 days notice. Now, what type of impact would that have on your business? It would be catastrophic. So very important, once again, to ensure that if your lease does have this in there, we have it removed or reduced. A number of ways to get around it, but very important to at least know that it is in there. The relocation clause. What this is usually upon 30 to 60 days notice, the landlord has the right to relocate you anywhere within the building. So they could take you from that beautiful corner unit and stick you in the basement with no natural light and out of visibility. And as we discussed earlier, it generally takes about 12 to 18 months to relocate a dental practice. If the landlord is only giving you 30 to 60 days notice, or 1 to 2 months, what type of impact, once again, will that have on the business? There will be great amounts of patient attrition, the cost to relocate and build. There's a number of red flags that go along with this relocation clause that may be within your lease agreement today. Additionally, the landlord's request or ability to request financial statements. Now, I know that over the past few months, if you were discussing with the landlord about some form of rent abatement or deferral or some rent reduction strategy with the landlord, if they did request their financial statements and you declined, this could have put you in default of the lease agreement, depending on how it's structured. Additionally, landlords love to request financial statements in and around renewal or sale because they are keenly aware and clearly aware of the amount of money that may be changing hands, or if Dr. Joe Smith is making $1.5 million a year in his practice, but only paying $2,500 a month in rent, and the landlord has the they have the right to request financial statements, you can definitely believe that there will be an increase in the rental rates. So these are just some of the many different clauses and different traps that could be lurking in your office lease agreement. And it's very important, once again, that we have structured these properly and we use the leverage that we can get moving forward. And now, in terms of that leverage, timing is everything. So as you can see from here, we generally, as a firm, always advise our clients to begin the renewal process 30 to 24 months prior to the expiration of the lease agreement. And now the reason that we advise this is quite simple, and it's purely from the leverage standpoint. As we discussed earlier, it takes a great deal of time and money to relocate a practice. Once again, upwards of 12 to 18 months. Now, you may not know this, But landlords are very aware of that as well. And they know that when your option to renew deadline is 3 months from the expiration of the lease, that there's nowhere you can go. And they utilize that to their advantage. That's their leverage. The closer and closer you get to the expiration date, the less leverage you have and the more leverage the landlord has. Because if at 3 months you're going to exercise your option and the landlord faces you with a $5 per square foot increase in rent, what are you going to do? The landlord knows that it's not possible for you to pick up and relocate. They basically have you stuck. So by beginning the process as early as possible at that 30 to 24 months, this gives us the ability to hold that card close to our chest of relocating. Though we plan on never playing it, it does give us the ability to do so. And the landlord knows that. They're much more aware of the fact that we need to actually pay attention to what they're requesting and their upcoming renewal, because otherwise they do have the ability to walk away from the space. Now that's really one of the key reasons that we are as successful as we are, and really what we advise for yourselves in order for your upcoming negotiations or your renewal. An important aspect of that as well in terms of the process is this pinwheel that you can see here. It's 8 steps, and really how we have crafted and structured our firm and how we craft our negotiations is through these 8 steps. So the first being is that we gather all of the information that we can get. So all of the lease documents, all of the contracts, all the contact information, everything we can get our hands on that are pertinent to the upcoming negotiations we grab. Now next, we identify your practice and career goals. Depending on the stage in your career that you are in, if you're just starting, what do you want that practice to look like? What are your goals in terms of the new practice? If you're in your mid-career stages, identifying how much longer do you want to practice? How much longer do you want to continue on your path? Do you want to add any associates in the near future? Now, these few questions, along with a couple of dozen others, really helps us get an understanding of yourself, the situation, and what your main priorities and goals are moving forward through the negotiations. Now, after that, we take everything that you had just mentioned and we review the office lease agreement from cover to cover, ensuring that we understand every intricacy, every pitfall, every trap, every loophole in the lease agreement. That way, we know exactly what we're expecting, we know what the issues are, and we know what you need in order to have that strong foundation, as mentioned, rather than a crumbling shell. Now, after we've gone through the lease agreement, we then prepare with our market research. So this gives us the ability to know the market, what's going on around you, what are the trends in the market, the vacancy rates, are they dropping, are they increasing, are the rental rates increasing, and if so, by how much? By doing so, this really grants us the ability to have a clear snapshot of the market and give us a clear understanding of the market situation. Now, the next step is the outcome and strategy development. Now, essentially, this is where you sit down with the lease negotiator and you outline your high, medium, and low priority items. What are your top tier priorities for the upcoming negotiations? What do you need to be done in order for you to deem this successful? Then we outline our medium priorities, some things that you would like to have but not necessarily need to have. And then, of course, the low priority items, which are what are some of the things that we're willing to concede on in order to get some of the high priority items. And now, as you can see here, we've gone through 5 full steps of our 8-step process, and we still have not done one thing, and that's reach out to the landlord. That's because we are firm believers that it is far more important to have all of the information clearly outlined in front of you, rather than making some of the mistakes that many of your colleagues do, which is just reach out to the landlord and hope for the best and take whatever the landlord is offering. This way, we have all of our information and we know exactly what type of situation we're going to be walking into and what steps and goals and procedures need to be done in order for this to be successful. Now, when we do in fact reach out to the landlord, the first thing that we do is negotiate the economics or the rental rates. We hit them in their wallet, essentially, to pique their interest, to get the best financial terms for you. Once we have done our back and forth for the negotiation on the financials and we're happy, we then move on to the legal terms and provisions. This ensures that it's structured properly, ensures that we've given you that flexibility and stability and protection from any of the traps or the various loopholes that the landlord may have that we had already outlined in step 3 of the process. Now, once that is completed, we then do a final review and execution of the lease. Now, this is an extraordinarily important step, and we have software which takes the documents and goes through to ensure that there are no additions or changes from the final document that we had sent to the landlord. Because more often than you would think, landlords try in the 11th hour of the negotiation to slip some extra language or take out some of the language that we had worked so hard to get. So by doing this for final review, we ensure that the landlord hasn't pulled a fast one on us and has not tried to take advantage of the situation. Then from there, if all checks out and is good, we then execute the lease agreement. Now, further to our negotiations as one of our top priorities as a firm, we also do something called a critical dates and risk analysis. And this is a $1,500 value where we spend 3 to 4 hours analyzing your lease agreement for traps, many of the aspects that we discussed today. But we then get on a scheduled call to cover you and your vision plan, the traps that we uncovered through your lease agreement and what they mean to you, how that affects your business, and what can be done in order to help mitigate those. We also then go through the ideal lease and what it should look like for you, how it should be structured to be the best for you and to be of the most advantage for you. And then we go forward and discuss how to negotiate effectively. And we create a tactical plan and discuss what needs to be done in order to get to that final form lease that you are happy with, that is structured properly for you and protects you moving forward. And now, though that is normally of a $1,500 value, as a thank you to everybody that was in attendance today, that lease review or that critical dates and risk analysis will be complimentary on a complimentary basis. And any of you are interested, please do answer the poll or feel free to email through at the info@cirrusconsultinggroup.com, and we're more than happy to help review that lease agreement and give you some feedback, either myself or one of my colleagues. So Dr. Habib, I see your question. How common is it for landlords to ask for a personal guarantee, and do doctors often agree to it? So very common, in fact, that landlords do ask for a personal guarantee, and more so when starting out in the location rather than when you're still there. But landlords will try to keep you on the hook and have the most amount of skin in the game, if you will, to try and keep you to the utmost liable. Now, in terms of it, I would be happy to discuss this with you offline as well after the webinar. And that would, I think that would be definitely advantageous for you. Just get a bit more of an understanding of your situation. More than happy to reach out to you. Another excellent question here from Dr. George. Why start negotiating now given the COVID-19 pandemic? Now, what we're seeing here is that though there is some uncertainty surrounding the current world and what's happening today, by starting now, we are seeing a great deal of success from the landlords, because as I mentioned earlier in today's conversations, today's webinar, a lot of them are looking at tenant outflow rather than inflow. So by beginning the negotiations, especially with the lingering pandemic ongoing, we're seeing that landlords are much more amenable to making changes and making those variations, and are being looser on some of their financial requirements. So definitely within the range that we discussed earlier, 30 to 24 months, we're seeing a great deal of success, and that landlords are more than happy to begin those conversations and try to keep you as a tenant. And to Dr. Griffiths, in terms of if the practice is in a trust, should the trust or the PLLC practice be the lessee? The PLLC practice should be in most situations, but what I would suggest is that if you would like, more than happy to take that conversation offline as well. I did see you had a question about the death and disability clause. Further, I think that it would be best and advantageous to discuss offline, and because a lot of these, especially in terms of the corporations and the PLLC, it is unique dependent on your current situation. So more than happy to take that conversation after the webinar and have a discussion with you and on your specific situation. Now, once again, I just want to thank everyone for attending today's course, and please do not hesitate to reach out to the email below or the phone number to request your complimentary lease review. Either myself or my colleague will be doing 3 to 4 hours worth of preparation, going through the lease agreement in detail, getting a clear understanding of all the loopholes or the possible liabilities you may be exposing yourself to, and we'll do a market analysis showing whether you are overpaying, underpaying, and if so, by how much. So please do not hesitate to reach out. We are more than happy to do that. But once again, thank you everybody for attending today's course, and I look forward to speaking with many of you very shortly. Thank you. Have a great weekend.